Okay, let's look at this is one of the trade that I took, I believe, last year, 2020. You can go back to Instagram and Telegram, you can see the setup. So someone was asking me like, how did you actually got to take this trade and stuff like that? So I thought of just sharing it to the public. So if you look at what actually happened here with price action going up like this, and all of a sudden you get to see price decline, okay? And price decline, we see that there is a lot of price imbalance, okay? So if you look at here, you can see that price has been going up, coming back and balance everything, continue to go up, balance everything. But if you look at this level here, you get to see price declining, and then we see price pulling back. So the moment we see price pull back like this, we definitely know that this is a retracement. We want to see price continue to go down. So what we're going to be looking for is any institutional reference points at this level here to actually cause price to continue to go short. Okay, because if you look at here, you get to see that this low here has been violated. Look at this low here has been violated, which now actually confirms to you that price is bearish. Based on order flow, price is bearish. So when we see price pulling back, we definitely know that it has to go down. It doesn't have to take out this high here, because price is bearish based on this market structure being broken, on this low being broken. So we get to see price pull back a little bit. So what we're going to be looking for is actually any reference point to go short. So if you look at this level here, we have an order block here that we're going to use as a point of reference to actually go down. Okay, and if you look at this level here, you get to see that we have a lot of flows at this level here that are being taken out. Okay, so since price now is taking out this flow, okay, it sort of now gives us an idea or validates the fact that the market is in a bearish condition. So anything that we see full price going up, we definitely know that is just a retracement or is just a pullback. Price needs to continue and go down. Why? Because the order flow, it's actually bearish. So what we're going to be looking for here, it's actually for price to go up, then pull back a little bit. Since we saw price breaking this previous market structure, it has now confirmed that we are in a bearish market. Okay, so now what you're gonna be looking at now, it's your what? It's your mitigation block, because we say a mitigation block, it's a failure swing in price action due to an order block. So we get to see that our price pullback and it failed to actually form a higher high or a swing here. So we get to say, and it's a mitigation this level here. So let me just mark this level as our mitigation. Okay, so we get to see our price getting to this level, and immediately we get to see price dropping. That's all there is to it. And since we know, looking at this low here, we're gonna be having some order blocks here at this level. If you look at this level, we have an order block here. So, but we're not gonna be looking forward to take this order block. And the reason why we're not gonna be taking this order flow block is based on order flow. Okay, so when it comes to selection of which order block to take, order flow is one of the concepts that we need to understand, because it gets to now give us an idea which order block to take and which order block to ignore, based on the fact that if order flow doesn't align up with your order block, it's most likely to be violated. That's what we get to see here. Price violating this thing. Okay, if you look at, let me just put this line straight here. So you can see that our price took out everything, continue to go down. Okay, so let me just put this. so that you get to see the drawing. So if you look at here, we have our mitigation block, other block I've explained. And if you see here, we have this low being taken out, which confirm that we are still going down. So we have price pulling back. And since we have a market breaking structure, which has confirmed that we are in a bearish market, that simply means this move going up is a temporary move. We're going to continue to go up, to go down, I mean. So what we're going to be looking for is actually a mitigation block or an order block. For this case, we find that we have a mitigation block. So we're going to take that trade there. So another thing that you need to keep in mind, after prices drop, we get to see price pulling back. And when price is pulling back, it's pulling back in a compression. Okay, so you get to see that our price is moving back and forth, back and forth, back and forth. It's not something like this. Okay, so there is a lot of price coming back and then continue to go back and then continue to go up. So it's moving like in a wave, something like that. Okay, so we get to say that we have compression at this level, price going up with compression. And when we see compression, the next thing that we need to expect is a shoot in price. For an example, if you look at this level here, you get to see price moving up with compression. And the next thing we see, it's a shoot, okay? And then compression a little bit, and then it's a shoot. And then we see compression right now, we're gonna see a shoot, the next thing that's gonna happen. So when we see compression, it actually sort of gives you an idea that whatever direction in which price is actually compressing towards, look for something that you can use as a point of reference point to actually sell short or buy at that level if that compression is going down. But in this case, you can see the compression is going up. So we're going to be looking forward to do what? To sell at this level here. So we find our reference point, which is going to be a mitigation block. So we are selling at this level. Okay. So compression is sort of like it gives you a tip to say, man, you need to watch out something. Something is there. So the moment you see compression, you need to be looking on your left side and look what you have on your left side. So we get to see that we have mitigation at this level. So we definitely know when price gets to this level, it's just going to spike this level, and we get to see a shoot in the market, because compression is always followed by a shoot in the market most of the time. Okay, so we get to see this low here being taken out and price continue to go down. So since we are in a bearish market, what we're going to be looking for is simply bearish order blocks, bearish mitigation, and bearish breakers. That's what we're going to be looking for. Don't look for any bullish mitigation or bullish breaker in a bearish market condition. That's when these things, they get to be violated. Okay, so what you're going to be looking for is anything that support the idea or the other flow that we have at this moment. We say the market is bearish. Okay, based on what we see here, price doing, taking out previous lows, which simply signals to us that we are bearish. Okay, so if you see the market taking out previous highs, it simply tells you that now we are in a bullish market. So you're gonna be looking for bullish order blocks and bullish breakers. So in this case, we're gonna be looking for anything that is bearish. Okay, so meaning we're gonna be looking for, you look at here, we have a breaker here, that here price got to this breaker and continue to go down. Okay, so when you are trading, whatever you are trading, make sure that you understand our order flow. It's gonna save you a lot of money